Pennies Going in Raw is a production of iHeartRadio. The opinions expressed in the following podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide education and entertainment about the financial industry and the stock market. Enjoy!
On this episode of Pennies Going in Raw, we discuss earnings season, SPY, and more.
You find out life's this game of pennies.
Oh, you guys know we only have a 40% runner. Hello, 40% is a fucking killing.
We've been compliant for too long. It's time we go to war.
I don't have a Roth.
Hugh knows so much about the market that his brain doesn't have enough room for grammar.
Hey, who told me about IDEX? It's going up a shit ton now.
We're up 4%, baby. No way. 4 fucking percent.
You asked the exact same question with 2 words different.
It's like, man, I just got dick whipped for like 20%, and now that f***er's up like 50.
I bet Warren Buffett never did that.
I'm just making this voice memo to call out unusual whales to a fight.
The pennies we need are everywhere around us.
Pennies.
Going in Raw.
Featuring Dan, Deity Dips,
And Hugh, honey.
Produced by Vinny.
And Christian.
Let's go, baby.
Welcome back to another episode of Pennies Going in Raw. Today is Wednesday, July the 20th, and SPY's up 3% today, or just about 3%, approaching that 392 spot. Kind of a lot more than expected for today, wouldn't you say?
Today was a gap and go day, 2.7%. And honestly, I'm kind of looking real quick. It doesn't even really feel like, besides open, like bulls were even tested, which is kind of crazy because, 2.7% is a lot. Off open, I guess, we tested that 385, which still 385 was still, a percent higher just about than where we closed on Monday night. And then from there, it was just kind of like stair-stepping up. And, we just kept going. Honestly, really impressive. Really impressive overall for SPY. A little bit chopped towards the end of the day. And then, after hours, Netflix
back on track,
earnings report. Yeah. And we're sitting at, we hit 393.30, which is really honestly pretty wild, especially considering the fact that two podcasts ago, we were sitting down in 380s, and we were at 377, like a week and a half ago, which is really wild considering that we're at 392 now. And really, when you want to go to a month ago, we were thinking that we would be at 330. So pretty impressive. The one thing about SPY that I will say is that I feel like I've been pretty bearish overall, and I don't want to be bearish. It's just I don't want to be a long here. And on Sunday, I had previously said that if we had gotten up to 393, 392, 390, that was close to the breakout zone. And at that point, if we were to break out there, I truly feel that 402 to 409 was on deck. Now, I know that's what I said. However, I'm a little bit concerned about the volume currently. What? Two things. One, about the volume, and the fact that we're up since Friday. We're up $20 a share on SPY, or 200 on SPX. That has me a little concerned considering it's Tuesday. And the other thing is the volume. SPY did 2.7% today, and on total volume, we did 78 million. And that includes the after hours and the rebalances and all that. at 2 p.m., we were at like 40 million. That's super concerning to me. If you're a bull, in my opinion, you obviously like that you're headed for a breakout. However, in my opinion, you don't want us to see 395 or above before Thursday. Now that gives a really tight constraint. We're only less than 1% away.
Why
that
before
area.
Thursday?
What?
Why before Thursday? What's with the specific date?
It comes really down to more the consolidation. Because if you gap up Wednesday, and let's even say that you gap up and you don't move, and then Thursday you gap up. If again we don't see volume, in my opinion, it's getting ready to dump it. And the reason I say that is because volume is that we haven't seen, and on this bear market rally, we haven't seen any type of panic selling. And it's the one thing that we always come back. Two things that I try and always stick to are the controlled selling. The bear market rally, can be vicious, like we're seeing. And number 3 is the PE ratio. Those are the 3 things that I feel like I try and talk about as much as possible. Now, when it comes to this little breakout zone here, it's a major breakout. And 78 million shares on a 10-point breakout is not good enough. It's not going to do it. A low volume breakout almost always fails. So I'm not going to say that we've broken out yet. Okay. However, if we gap up tomorrow, I'm talking about Wednesday now, or if we gap up Thursday and we see 395, 396, we better have an over 100 million volume day, consolidate there, and make it through the rest of the week without falling back under 390, or there's trouble. And what I mean by that is that all of this feels like, of course, now it really feels like everybody's super bearish, which is in the favor of the bulls, obviously, because that means that we can go and test that 402. However, if you truly are a perma bull and you think that bottom is in, or you don't think that we're going lower, the one thing that you need is some volume added to this breakout, or else this will be a nasty. Actually, let me peek in on it. Let me peek in on the monthly candle right now. So the monthly candle right now for July is actually not that bad. All right. Obviously,
anticlimactic there.
Well, it's an inside candle because June's red candle is 416 to 360 and closed at 377. July picked up, tested 371, and since then has been a pretty green candle. Now, again, even if we got to that 409 breakout spot, it'd still be an inside candle. But again, what you need to see out of the bulls is pretty big volume, because this monthly candle, if it breaks down from here, and like I said, we're back at 380, that is a failed breakout attempt on a vicious June monthly candle. And that is kind of like one of those things where, you see that monthly candle after what we saw in June, and that's ugly. If you guys pull up the monthly, go to May, and this is kind of what I mean. So in April, we had a similar looking candle to June. Real ugly, real red. The May monthly candle was 456 down to 412. Okay, that's pretty ugly. That's a 8% red candle. And again, it was a full blown red candle. Now, then you got May. May opens up, it tests 381, and it also tests 429, and it ends up barely closing, and it closes at 413, which coincidentally was the bottom of April's red candle.
It's all coming together.
So then June picks up off of it. And what do we see? We see a massive red candle down, just like what we saw in April. And what do we see? Again, 417 down to 362, closes at 377. Now we have this green candle, goes back down, retests 371, and now has a pretty nice green candle. But again, if this doesn't hold into the next 2 weeks, really only one more week and a half, and this breaks below, and we're sitting back at, like I said, I tweeted out today, if volume doesn't show up, we can quickly be back underneath 375. And at 375, that monthly candle will be a small green or a red candle. And we're looking at another big sell down, similar to the setup that we saw, like I said, in May going into June. And so that's the Bulls' worst case scenario. So this is very high risk, very high reward situation for the Bulls, because if volume does step up, they have room to 410, 406 to 410, I'll say. But if volume, and honestly, that gives them a little bit of wiggle room into August, into midterms, because now it's like, they're fighting back a little bit, and they really haven't done that since March. So this gives them a little bit of wiggle room. This is the Bulls' time to potentially fight back. But again, I'll say it 50 more times before today's podcast is done. If volume does not step in to this breakout, we will be so fast by the end of the month, we will be back earning 375, and that'll be an ugly monthly candle. And so your issue isn't holding 375. Your issue is what comes after that 375. Because you give up 375 and then you give up 371, and we're probably looking at 350. And that's just the reality. So very high, very, very high risk to reward. And again, that doesn't even talk about the fact that we've rallied 20 points in 3 days. And that's even with Monday afternoon's big sell-off. So if we don't consolidate here, the chances of us selling off become greater and greater. Last thing that I'll say, because we talk about volume a lot on this podcast, is when I look at the monthly candles. What? Yeah.
So we do talk about that every now and then.
Yeah. So when I look at the monthly candles, okay, May, which again we talked about was that small green. Okay. On the monthly, we traded over 2.4 billion shares. Now, June, that massive red month. Again, and this is where all these different things, most of the time, you're never going to see something that is end all be all. And what I mean by that is that, it's never going to be like, oh, if this shows up, this is bound to happen. Okay, the market is about curating a thesis and backing that thesis. So the next thing, when I talk about panic selling, this is another confirmation that we haven't seen any panic selling. That massive red monthly candle on June, and we did less volume than in May. And in June, we only did 1.9 billion shares. Now, on this little green candle, and again, we're not, it's not the first or second week of the month. Okay. We are we're closing in on 3 weeks through the month. Okay. So we're 70% there, and we're only at 1 billion. We're only at 1 billion shares traded, and we're 70% through the month. May, we did 2.5. We did 2.5 times. what we're at, and we're at the 3rd week mark. Hell, last month, we still did 1.8 billion. At this rate, we'll barely reach $1 billion. So last month, which was significantly less than the month before, will still only be half the amount of volume as that month. That is super concerning for the bulls. Everybody, like, this is like the type of thing where, like, Biden needs to tweet out, everybody needs to buy 100 shares of SPY or 100 shares of SPX. Because truthfully, getting 300 million people to buy is the type of volume that we need to see. Like, getting 300 million people to buy a few shares is honestly what we need to see over the next week and 2 days. Because again, if no volume comes in, this is disastrous for bulls. Disastrous. In fact, if you're a bull, you should be praying to the gods that this week we do not see 395, 396, 397. Now, it doesn't mean that we get to that spot and volume doesn't come in. Of course, volume can come in at that spot. However, the probability that we sell off and revert back down to sub 375, the probability becomes through the roof if that happens. So I know this is like the long-winded way of saying currently there's no volume on SPY to support this breakout. That's the long-winded way of saying all that.
All right. Well, we do know it's earnings season. And a couple hours ago, we had a pretty big one come out, Netflix. And I think it's also important because its last one was really, really bad. And they lost all of these members. They expected to lose more. The future guidance wasn't good. And this one just came out, and thank God. I mean, for Netflix, it's up 2%. But what do you think about Netflix's earning? Have you read it? And what is your overall thoughts on it all?
Yeah. So and I talked about this today. It's actually really funny to me because it kind of reminds me of small caps a few years ago. In the fact that Netflix actually missed on revenue and they barely grew. I mean, they grew less than like 7%. And currently they're up 10% after hours, 8% after hours.
I wasn't looking up. But yeah, it says 6% today. But I literally just Googled it. I don't even have a browser.
Well, that was 6% was today. Right. Let me see what we're up after hours. So after after hours, Netflix is up.
Another $15.
7.5%. On missed revenue and barely growth.
I mean, that was the thing they were really worried about last guidance. They expected to lose even more this quarter. So, I mean, the fact that they didn't lose.
So let me ask you a question.
Hit me.
You know, like...
I guess you're setting low expectations for yourself last time, and then you just surpass them. So I guess that's...
I was going to say, let's just say that you ever go to the bar and you're like...
Yes.
Yeah. Rhetorical. Yeah, okay. So you ever go to the bar and you just, you walk into the bar with your friends and you're like, who cares about girls tonight? We're just trying to have some fun. You know, setting the expectation.
Later, I'm like, nope.
Setting the expectation that you don't want any girls tonight. Girls aren't even a thought inside your mind.
So this whenever you go home alone, no one's making fun of you.
Nobody's making fun of you.
It was fucking boys' night. Sorry.
Yeah. Like, sorry, I wanted to hang with the fellas tonight. Jeez, call me a terrible friend because I put that to the side tonight.
Oh, yeah.
That's kind of what this feels like Netflix said. It kind of feels like, hey, if we actually do shit the bed on earnings, we warned you.
They were talking to a girl at the bar and they were like, hey, I have a micro penis. They're like, it's okay. You have a good personality. And then they go home and it's, normal size. They're like, wow, you killed it.
Yeah. Your ex-girlfriend told you that, you're not packing. So now you start to tell every girl, hey, fair warning, I'm not packing. So that your average, she thinks you're loaded. That's kind of what this feels like Netflix did to us. They kind of said, hey,
Again, when you're setting the bar for yourself, you do have a lot of wiggle room.
You have so much wiggle room. These companies can see whatever the fuck they want. And now it's like, they're being rewarded. Netflix is being rewarded for missing on revenue of an already reduced guidance. They're being rewarded. If I was to give you 7% of your net worth because instead of sleeping with a 10, you slept with a 6, but it was better than a 4. And I said, oh, here you go, Dan. Here's 7% higher. Or here's 7% more money than you have. Does that feel like you deserve it?
No, not necessarily, but sometimes blessings are mysterious sometimes. So
yeah, it just kind of feels like one of those things where again, like retail just can't win in these situations because when you hear that guidance, you're hearing it from the horse's mouth. So if you're hearing that, and I'm a holder of Netflix, and I already see Netflix down 50% on the year. Okay. And then they come out and they say, hey, yeah, guys, by the way, like we're expecting like another terrible quarter next quarter. And that quarter's only half as bad. I'm pissed at Netflix because you told me to expect more downside. And now we're up $50 a share from where you said that. It kind of just feels like you just like you can't trust the company that you're talking to, or not that you're talking to, that you're invested in. It just really feels kind of like a disappointing thing. And as an investor, I don't know how. You know what? We got to get Mark Randolph back on, or what was his name?
Yeah, Mark Randolph, the founder.
Yeah,
of
Mark
Netflix.
Randolph.
Yeah. What did you ask him his thoughts on the recent earnings report?
Yeah, he probably hates being compared to Netflix now that he's been gone like 20 years.
Yeah, he's like, I do other stuff.
Yeah. Like I sold a company to Google. We're like, yeah, bro, cool. So Netflix.
Are y'all bringing The Office back or no?
Yeah. So is this password no share thing true?
I'm like, yo, dude. So the end of Stranger Things, like I have this theory. He's like, I don't watch that. I'm like, so 11, right? She's in the upside down. Okay.
Yeah. Oh God, yeah. But so that's what. But see, the more, and I'll be done talking crap on Netflix's management because they all do it. If Ford CEO, if you're listening, you did it before. I don't know why you'd be listening. However,
Henry Ford.
Henry Ford, the Jr., the Fifth. I know you're listening. That's kind of what this feels like. And most of them, it kind of feels it's the same thing. Like when you see when you see the government declare a recession, like 8 out of 10 times, that's within 10% of the bottom for the stock market. That's kind of what this feels like. Like you can't trust them. And in fact, like you should take their word with a grain of salt. And it's a shame because the game is already rigged against retail. And then you add this into it. And we don't have to go, super far into it. However, for any of you that don't know, you know how you have analysts. Well, these let's take like Bank of America, because honestly, I'm on bad terms with Bank of America currently. So yeah, I'm okay with talking crap on them. Bank of America, okay, they have analysts who get proprietary information to make estimates for earnings and other price targets. However, Bank of America also invests large amounts of money. Now, you could sit there and tell me that they're two different divisions all day long, but if you're not going to tell me that there's any sort of conflict of interest inside that little department, I'm going to call it bullshit. And that's what I'm saying is that the same people who are giving analyst recommendations and who are getting privileged information are also going to lunch and going to dinner meetings with the same people that are investing money inside those companies. It just goes back to one of those things. It feels like it's really rigged against retail. I just think it's fucked up. That's all. But last thought.
Okay.
Because the overarching thought on this was Netflix wasn't the only company to give terrible guidance. So are we going to see this kind of like trend for over the next few weeks where companies that gave all this crappy guidance, maybe they don't do that bad, and when they don't do that bad, it's considered a buy? Like, is that a buy signal now? I don't know. But it's something I'll be keeping an eye on, because it kind of feels like, and Willie Meatall said it today, or he tweeted this underneath my thing today, and he said it kind of feels like 2019 when everyone was buying public offerings up and saying that they were bullish. Yeah, it kind of feels like that. So it's something I'll be keeping an eye on. That's all.
All right. Well, I know that was Netflix's earning, but we have a lot this week as is earnings season. Tomorrow we have Tesla's. Pretty big one for that. We'll probably see like $44 billion worth of personal expenses from Elon. Thursday, we got like AT&T, American Airlines, Nokia, Snapchat. You got a good bit this week. Twitter on Friday. Ooh, Tesla and Twitter this week, man. Let's see. But any ones that you're looking out for to, me personally, I always keep an eye on Domino's. I think it's immune to every market.
Yeah. Just I'll be taking a look at Tesla, just because but Tesla's kind of become decorrelated with the market as of recently, especially today. As we said, is that the market was up about 2.7%, and Tesla for most of the day really didn't do much. In fact, until 2:00, it was trading pretty much break even. And then from 1:00, from 1:00 till close, it went on a nice little 1.3% run. Where typically it feels like if SPY's up 2.7%, Tesla's up like 8 or 9%. So it'll be interesting to see with Tesla again. And the one thing, like, I don't really worry about much of it with most companies. However, Tesla, I'm always worried if Elon Musk is going to drop a bomb. Like, I think I heard a rumor that he's going to be on the conference call. And every time that he's on the conference call, it typically is because, I don't want to say because something's not good, but there's always a reason that he's on the conference call, if that makes sense. Like, he doesn't just go on the conference call to go on the conference call. And I've racked my brain around it a few times, and for the life of me, I don't know why or what he's going to be talking about. However, I am a little concerned about that, obviously, because it's tied to the indexes. And again, is that, like we talked about earlier, the indexes, in my opinion, are holding on to this breakout by a thread. And this is the go time. The bulls have a window to make this happen. If they want to see 409, they have a window, but that's it. That window is very small and it's closing quickly. So yeah, Tesla will be important to me. I always like to just take a look, like Ally Bank was today, but I always like to just take a peek at stuff. The banks already reported, and that always interests me because it kind of tells me, what exactly, is going on from the consumer side, from the consumer side, from the commercial side. And I think it's, I think it's cool. So I just like looking at different earnings reports, but more from like a nerdy perspective. But through the end of the week, there's not too much that is going to fancy me. Nothing too important. You got J&J or I think they reported today too. So so really nothing except Tesla that really is important to me.
Another thing that came out today was Apple reducing the amount of employees and amount of spending. Is this just them playing it safe in a high inflation kind of sketch market, or do you think this has other implications?
So it's funny because I was actually talking to someone about this yesterday, and actually late last night. This is when I do all my big thinking late at night, and one of the things about companies is that they're always looking out for their backs for the future. I don't know if I'm necessarily saying that. Yeah, I think I'm saying that right. Is that they're always looking into the future to protect their backside. I think that's probably the better way to put it. And what I mean by that is that, yes, they're probably just bracing and it's not that big of a deal. However, in the event that we do go into a very, very tough economic recession, they're going to use this time, whether it's relevant or not, to say, listen, we did all we could. We slowed hiring. We cut back spending. You know, in July, that's what we announced. And we did all our best efforts. And then they lay off people. It's kind of cynical. Cynical? Am I saying that right? Cynical?
Cynical's word.
Yeah, it's kind of cynical because it's kind of like makes you think the worst about them. However, that's kind of the way it goes, because at the end of the day, if we do go into an economic recession and people will be laid off, then it makes it a lot easier on the share price if the CEO can come out and say, we did all we could. We cut back spending. We slowed hiring. It's just kind of like a way to where they can come back to this. Now, do I actually believe that like materially they're doing anything currently to like really cut back spending and slowing hiring? No, like nothing crazy.
Like we decided we weren't going to buy Fisker's company to be the EV of Apple.
Yeah. That's literally like what it is. Like we're going to stop floating around Apple cars for the next 2 years. That's like what it comes down to. Like we're going to disband like the I don't even know, like the spaceship program, like little things like that, and like maybe like instead of hiring 1,000 people this year, we're only going to hire 900, so that on paper they can hold up to their side of the deal just in case. Or the flip side of this is that if we don't go into recession, they don't have to lay off anyone. Then the CEOs get to come out and say, look at that. Our efforts.
So it's back to like the same thing with Netflix, just being like, hey, sorry, they're doing the exact same thing, but just in a different way of being like, hey, we'll probably suck. But instead of being like, hey, we'll probably suck, they're going to be like, hey, we're going to do some shit that will make us probably suck. And it'll make us look good regardless.
Exactly. Or they're going to, like I said, is that if we go into a recession, they're going to say we did everything that we could. If we don't go into a recession, they're going to say our quick thinking actions to be preventative work so well that we're now inside a beautiful place and we're able to hire more people than before, and give themselves a nice big pat on the back. And that's the way that's unfortunately the way that it typically works. And again, we'll see how it shakes out, but, and I don't blame them. They're public companies. So, they're looking out for their best interests. But that's typically the way that it works.
All right. Well, is there anything else? I know you mentioned some key levels this week, but is there anything, and we always blame it on, this shouldn't be right because of the volume, but assuming the volume kind of stays the same, do you kind of expect the trend of SPY to keep going this week? And is that 413 mark really where you're calling the max high?
Yeah, like 409 would probably be it. Like I said, is that I think that like bulls really need to get through earnings, and then your next game, I don't want to call it a gamble, but your next thing is going to be sorry, I lost my train of thought. Your next thing is going to be FOMC. And so that's what I mean is that the Bulls really need to create a nice support here, because if FOMC doesn't go their way, and I'm talking 75, 100 basis points, then they're going to be in trouble. And they're going to need a strong, even if we're sitting at 410, you're going to need this 390, 395 to hold strong support. Because again, strong resistance turns into strong support. Strong support turns into strong resistance turns into strong support, and vice versa. So that being said, you really, if you're a bull, you kind of want to build this foundation right here and build this level for the next move up. Again, you got to get through earnings, and you want to continue to build this stair stepper up, and then you got to get through FOMC. If you're through FOMC, through earnings, through FOMC, you're still hanging above 400, and on the monthly chart, you get over, let's call it 1.9 billion shares traded. Bulls are going to be all right going into August for sure. And then you have midterms, and that is historically inside the Bulls' favor.
Oh man, is there anything else you want to touch on before we leave till Sunday?
Nope. I think I'm pretty good.
All right, guys. Well, we will see you next time. Good luck making it through earnings practice or earnings season. And maybe next time we talk, we'll be above 400 again and make fun of Hugh. So we'll see where it goes, and we'll see you all next time. Peace.
Take care.
Pennies Going in Raw is a production of iHeartRadio. For more podcasts from iHeartRadio, visit the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts.